In the southern reaches of Boston, Massachusetts, on a morning cold enough to carve through bone, something subtle yet profound began to stir within the vast machinery of the NASDAQ exchange. Endless streams of data and trading noise, a small name, Cue Biopharma, began flickering on traders' screens. At first, it looked like any other biotech startup, experimental, underfunded, and largely unnoticed. But beneath that quiet surface was a company attempting something far beyond ordinary pharmaceutical ambition, an effort to reprogram the human immune system itself. Cue Biopharma's scientists were not merely developing another cancer drug, they were trying to engineer immunity, to teach the body's T cells when to fight, when to rest, and, astonishingly, when to forgive its own tissues. Their mission was nothing less than to rewrite the biological decision-making process that governs health and disease. In a world where most immunotherapies still operate like sledgehammers, Cue Biopharma promised the precision of a surgeon's scalpel. At the center of this bold idea was their proprietary technology, Immuno-STAT, short for immunoselective targeting and alteration of T cells. Where conventional immunotherapies flood the entire immune system with stimulants, Immuno-STAT was designed as a modular molecular scaffold that could dial the immune response up or down, molecule by molecule, receptor by receptor. Imagine a circuit board for immunity, capable of activating only those T cells that recognize a tumor, while silencing those that mistakenly attack the body itself. It was elegant, it was futuristic, and if it worked, it would be revolutionary. Their flagship drug, CUE-101, targeted HPV-positive head and neck cancer, a notoriously difficult cancer type with limited effective treatments. By pairing CUE-101 with the global checkpoint inhibitor pembrolizumab, Cue Biopharma hoped to demonstrate that its technology could supercharge existing immunotherapies. And in 2024, the data seemed to prove them right. The company reported an overall response rate of 50%, including 2 complete responses, and a 12-month survival rate of 88%, extraordinary results for a first-in-human study. In the biotech world, such data is the spark that ignites everything. Share prices spike, institutional funds flood in, analysts revalue the company overnight, and the CEO suddenly becomes a regular guest on CNBC. But that didn't happen here. Instead, Cue Biopharma's stock twitched, then faltered. Behind the optimism, something was off. When investors opened the financial filings, the reason began to take shape. At the end of 2024, Cue Biopharma held about $24 million in cash. By March 2025, that number had dropped to roughly $13 million. In biotech, cash is not simply liquidity, it is survival itself. Most companies, after releasing such strong clinical data, would reassure shareholders that the decline was due to planned trial expansion or manufacturing scale-up. Cue Biopharma did not. Instead, it moved immediately to raise $20 million through a public offering. This was the first mystery. Why rush to raise money right after good news? Normally, a biotech company leverages positive results to secure a higher valuation first, waiting weeks, even months, before selling new shares. By acting so abruptly, Cue Biopharma seemed less like a firm capitalizing on success and more like one racing against an unseen clock. Was it facing mounting clinical costs? Was a previous partnership draining capital faster than expected? Or had something inside the company already begun to fracture? The filings offered no clues, and management offered no explanation. Then, almost immediately, a second mystery unfolded. Cue Biopharma announced that it had reclaimed all global rights to its autoimmune candidate, CUE-401, citing the termination of an existing licensing agreement. In the biotech ecosystem, where partnerships often define a company's survival, this was anything but routine. Normally, such collaborations span several years and involve shared R&D costs and milestone payments. To voluntarily pull back rights is rare. It usually signals either strategic repositioning or a breakdown in partner confidence. But before the market could even process that news, Cue Biopharma revealed something even stranger. Within days, the company had signed a new strategic alliance with Boehringer Ingelheim, one of Germany's largest pharmaceutical companies. The deal promised $12 million upfront, with potential milestone payments totaling $345 million. On paper, this looked like a major win, global validation of Cue Biopharma's science. But the timing defied every norm. Deals of this magnitude take months, often more than a year. of due diligence and negotiation. Here, it had materialized in less than a week. The sequence was too precise, too compressed, and too clean to be coincidence. Investors began whispering theories. One group believed that Cue Biopharma had been in quiet, unofficial talks with Boehringer Ingelheim for months, but couldn't formalize the deal until its prior license expired. The other, darker theory was that the company had rushed into the partnership out of financial necessity, trading future upside for immediate liquidity. Either explanation suggested pressure. If the first was true, it revealed a company navigating complex corporate chess with precision. If the second, it hinted at desperation dressed up as victory. Then came the third mystery, the one that truly unsettled investors. In September 2025, Cue Biopharma abruptly replaced its chief executive officer. Dr. Usman Azam, a respected veteran in cell therapy and former head of Novartis's global regenerative medicine unit, stepped in as CEO. The outgoing chief, Daniel Passeri, transitioned to an advisory role. In biotech, a leadership change of this kind, immediately following positive clinical results, is exceedingly rare. Typically, CEOs are replaced after failed trials, funding crises, or shareholder pressure. Here, success had seemingly triggered succession. That was the point when investors realized the story was larger than it appeared. A change in leadership at such a pivotal moment almost always indicates an internal realignment, sometimes strategic, sometimes personal, often financial. Was Passeri too cautious to pursue aggressive deals? Did the board want someone with broader pharmaceutical credentials to steer Cue Biopharma toward acquisition or partnership? Or was the company's cash position deteriorating faster than it let on, forcing a managerial reshuffle? None of these questions had definitive answers. Within weeks, Dr. Azam made his first public statement as CEO. Cue Biopharma will now focus on autoimmune diseases. That single line changed everything. The company that had made its name fighting cancer was now pivoting toward immune balance, toward tolerance rather than attack. In scientific terms, it was a fascinating shift. In business terms, it was seismic. Analysts split into two camps. The optimists argued that autoimmune diseases represented a more stable, more commercially scalable market. Cancer trials are expensive, unpredictable, and fiercely competitive, while autoimmune pathways offer broader patient pools and more manageable regulatory routes. The pessimists saw something else entirely, a company quietly stepping away from its original mission, refocusing not out of insight, but necessity. In their view, this wasn't reinvention, it was retreat. As of late 2025, Cue Biopharma's pipeline centers on two autoimmune programs, Q401 and Q501, both built upon the Immuno-STAT platform. No commercial products exist yet, and while the $20 million offering provided short-term relief, it was not enough to guarantee longevity. The Boehringer Ingelheim deal, while impressive, remains conditional. Milestone payments arrive only if development progresses as planned. One missed endpoint, one regulatory setback, and the entire financial scaffolding could collapse. Still, the partnership represents something profoundly symbolic, that a small American biotech running on ambition and ingenuity, managed to earn the trust of a century-old European pharmaceutical titan. It is both validation and warning, proof that Cue Biopharma's science has value, but also that it may no longer own it entirely. Investors today look at Cue Biopharma and see two potential futures. In one, it becomes the first company to truly design immune behavior, pioneering a new era of programmable biology. In the other, its cash burns out before the science matures, leaving behind only patents, data, and questions. Cue Biopharma's official slogan is aspirational. We are redesigning the choice of immunity. But the market asks, with growing skepticism, is that choice really ours to make? This story, like the company itself, is still evolving. As long as the ticker Q flashes across trading terminals, the mystery of its immune equation remains unsolved, a blend of brilliance, ambition, and uncertainty. The ValueStir channel invites you to share your insight. If you know of intriguing listed, unlisted, or soon-to-list stocks or crypto projects, tell us in the comments. Your tip could inspire our next investigation. And to every listener who watches, subscribes, comments, or shares, thank you. Your engagement fuels this channel, and we'll keep earning it with deeper research, sharper analysis, and stories that reveal what lies beneath the market's surface. This was ValueStir.